Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, October 28th. We are back with AIML Innovations. We're going to do, we have an interesting day ahead of us today, and we're going to do a quick demo of the Tech2 Health platform, which is AIML's kind of new company and partner in North America. So Fabrice, welcome.
Thank you. Welcome. Hi, everybody.
Fabrice, and you're the CEO of Tech2 Health, which is the mental health business, and you're based in Paris, right?
Yeah, we are based in Paris. It's a new company, actually. We have been created recently, this year in 2021, and we are developing quite a great platform about remote monitoring patients, but also on mental health. So we are on both markets, trying to really help to build the new healthcare system, which is really based on I would say value and very patient-centric.
Okay, so we're gonna get into it. So what we'll do today is we'll do a quick demo,
Sure.
kind of show people what you're doing, and then we'll open up for Q&A and all that good stuff. So for anybody that's new tuning into our program today, our goal is to bring you those stocks which have that 10x to 100x upside potential. So these are companies that are going after multi-billion-dollar market opportunities. They're at a key inflection point, and there are multiple catalysts in place to ignite that increase in value. We've already had 9 stocks in the last 18 months that have increased between 1,000 and even 5,000%, 10x to 50x. So now let's find out if AIML is going to be that next 10 bagger to join this great pantheon. So first, guys, what I'd like to do is before we actually get into the demo. So you started off talking about giving like a quick snapshot. So the market that you're going after, Fabrice, is kind of what, and like what is the problem that you were solving with Tech2 Health?
Well, we want to solve the crisis around the chronic disease. I mean, there is a big explosion of chronic disease everywhere in the US, as you know, in emerging markets, in Europe too. And the problem is always the same, actually. We are in a very curative health system, but we don't really take care of the prevention. And the patients, most of the time, can be hospitalized, so they can get their care, and then they go back home, and they come back to their normal life, and then come back to problem because they don't have the motivation to change their lifestyle, to follow their medications. They are really educated actually about their disease. So they need actually to be, I think, really under supervision of care team. And what we wanted to do with Alakin is exactly that. So Alakin is a platform that lets the hospitals, the clinics, health centers be able actually to launch any services for remote monitoring of the patient, but also to create any kind of digital therapeutics. So the main base actually is to really follow the patient in a very accurately way. So most of the time the patients, they go to one visit to another visit. Sometimes you can have 1 month between the visits and you don't know what's going on with the patient during that month. Thanks to Alakin, actually, the patients are followed almost every day. Okay. Because it's very based on patient report information, and especially symptoms and biometrics and vital signs. So the care team, this is a care team dashboard, for example. It is a multi-purpose.
I'm sorry, Fabrice. We're gonna walk through the demo here, yeah?
Yes,
okay.
Exactly.
Okay, so I'm gonna turn over I'm gonna turn over the screen to you, and you kind of do your thing.
I can start?
Yeah. Go ahead.
Yeah. So what we can see right now, it's a triage dashboard. So let's imagine that you want to follow, for example, depressive disorder patients or any other kind of patients anyway. So you are going to integrate a clinical protocol to follow those patients. And you are going to ask your patients remotely to report some symptoms, vital signs, or biometrics. And then all those information coming from the patient side, they are equipped with a mobile application. They can easily report those information, and they are directly reports on the dashboard, already with the intelligence actually to prioritize and to evaluate the risk of the information of the signs that are reported by the patients. You have access directly to information about the patients. So there is a patient record inside that can be used by the care team in a collaborative way, but also by the patients. You have all the communication tools. It can be chat, it can be video conference. The care team can organize the whole scheduling of the team. So we have access to a calendar, and you can create appointments for your team.
Fabrice, so what we're looking at now, this dashboard, who sees this? This is the care provider, the doctor?
Yeah, the doctor and the team beyond the doctors, because the doctor has his role, but also if you want to motivate your patients, you need to be to have more people connected to the patients. It can be a psychologist, it can be a nutritionist, even a personal trainer. So it's a very collaborative dashboard where many care team members can share the information and act for the good of the patients.
Okay, and what does the patient have on their end? What is their interface, or what is the device like? What is the connection?
The connection with the patient is with a mobile application. I can see some details. It's a very conversational application, so we wanted to make it easy, so they can report easily the information on their feed actually. And so you can see that there is also a medication report. The care team can send, for example, an exercise, a meditation exercise, or a physical activity exercise with a video. They can send podcast, and the patient can report.
Can you show the app, what the mobile app looks like? Is there a way to show that?
Not in the demo right now, but what I can show you some screens if it's okay for you.
Yeah, that'll be great. Yeah, because I think that's kind of interesting, because I think what people in the audience kind of want to see is like, okay, what is the patient actually, what are they looking at? Like, what is their interface?
Yeah, exactly. So the main interface of the patient, it's a conversational feed like this one. So the patient sends some information. It has been curated thanks to the clinical builder, and they can answer to different questions about their medication, about their feelings, about their symptoms, etc. And there are different kind of other features, very actually very cool for the patients. For example, he has access to let me show you scheduling of appointments, for example. So he can schedule directly an appointment with his team. He has access to the agenda of the team, or the care team can send some appointments, for example. I can show you an example of it if you want. So that's just to show this part. And also what we wanted to do, because we believe that health should be digital for sure, but it must be very human and certainly very local. So we have integrated quite a lot of features. For example, I can see this one. We can geolocalize any kind of services around the patients. So for example, it can be a clinical center, it can be a yoga center, it can be an organic food, because they participate to the well-being of the patients. So the patient can have access to those services. So there is a whole bench of ecosystem we want to develop around the patients and for the good of the patient near his home or near his office. So this is geolocation services.
Are you, Fabrice, are you on a new screen? Because I still have the first screen up. Are you moving to a new screen?
Yes. Can you see it?
No. We're still we're still on the original screen.
Oh, sorry about that.
Okay.
Yeah, I need to share. Let me see.
Okay. Because I was wondering, I know you're talking about a new feature, and we're still at, like, I'm still on the old screen. So. Yeah,
actually, I'm gonna share the Chrome. That would be better.
Okay.
And then you can see it. Sorry about that.
No problem. Okay, here we go. Okay, there we go. Okay, so this is what we need, Fabrice. This is okay. So this is from the user. So this is what the user sees.
Yeah, the user. They have access to different features.
Fabrice, are you able to start again, like from the user side, like walk us through what they get, like their interface. So like from the beginning. Yeah. Okay. Oh wow. Okay, This is interesting.
Yeah, exactly. I can show you actually the objective of this mobile application. So the first objective of the mobile application, it's as I said, it's a conversational feed. So this is something that is easy to be understood by the patients. for any kind of patients. So the care team actually is integrate a clinical protocol for any kind of conditions. This clinical protocol is sent to the patient. He is invited, so he can connect it via his phone. And then he is in a direct relationship with his care team. The main objective for the mobile application is to be able to report information about how the patient is feeling. Does he's taking his medication, for example. So I can show you, for example, this kind of screen. So we give him a reminder about medication. Then we tell him, this is great, you are taking it. And we give always some feedbacks. So if he give, for example, a weight, we will give feedback of the evolution. If you give any kind of other information, we always give feedback from the team, but also directly from the mobile. This is more scheduling appointments. So it's easy to schedule appointments with the care team. Just have to choose a date, what kind of appointment they want, if it's online or if it is at the facilities of the care team, on hospital, for example. I show you already the geolocation. What else I can? So you can report any kind of information.
Okay.
Like this is just an example of COVID. We always talk about COVID, but let's say you want to monitor your COVID patient that came back to home. So you can report your coughing, for example, your weight, your temperature, and you just submit the answer, and this goes directly to the dashboard of the care team, so they can follow what's going on. If there is any signs that could be prioritized for an emergency, for example, they will receive the information directly and automatically and prediction to the team. And what is important also for a patient remotely is to participate to its education regarding its condition. So it can easily have access to a library of contents. It can be a video or podcast or readings about his condition. And so he has an easy access to this kind of contents that can help him in his own education. Okay. There is an easy way actually to access the content via tags. So I can say, I just want to see podcasts about nutrition, for example, and then you will see the results, and he can keep going its education and its program about his condition. He has also access to its own patient record, which is something important. I mean, this is his own information, so he needs to be empowered about that. So he has access to digital record, health record, the same that the patient, the care team will have. He has access in the application here. Okay. And what else? Okay. Then we have the normal, what is normal today, a new normal in health, the telemedicine features. So you can have video call with your team directly, or you can report information, for example, by chat to the team. So this is a rich chat directly with the team. So you can send an images, you can send audio, for example, and you can interact with the care team thanks to the application too. So it's a very complete set of features between my personal records, my easy way to report symptoms and vital signs, an easy communication with my care team. What else? And also the geolocation of services, because we believe in Tech2Heal that it's very important actually to be local in what we offer and to be more human. So interconnection is very important to empower the patients, educate the patient, engage the patients, because if they are not engaged, if they don't understand the disease, they will be re-hospitalized, and this will cost a lot of money and will have some social effects on the families, on work, etc. So the objective is really to empower the patients. So it's a very patient-centric way of practicing medicine, more preventive and more collaborative.
Okay. Yeah, I think we just had a comment from somebody in our audience, Kevin here, saying that yeah, basically this this is actually be a very effective tool that you have now. Okay, so what you're basically showing us the Okay, again, this is from the user side, the mobile app, and of course, earlier we saw from the on the doctor side, their dashboard and all that stuff. Okay, so now you have also a mental health. You have a mental health aspect to the service, right? This is going to be this is the big thing that you're focusing on, right?
Yeah, we focus on both actually, but what we want to do actually, this is a platform that can be used actually by any kind of care team for any kind of condition. Because one of the great aspect of the dashboard is the clinical builder. The clinical builder is a way for the care team to integrate their clinical protocols, their questionnaires, when and how they want to send those questionnaires to the patient, the dialogues that can be created with the patient. Everything is automatized with the clinical builder that we integrate in this dashboard. But one of the big knowledge we have inside the company in our medical team is psychiatry, is mental health. And so we focus with these verticals. So from Alakin, we create a vertical called KUKA. KUKA is nice. It's coming from the animal koka, which is an Australian animal, and he's always smiling. So that's why it's a very positive branding.
Is it like a koala? Is it like a koala?
No, yeah, a little bit. The koka is, we say it's the most happy animal in the world because he's always smiling when you see him. And we say, well, that's a positive thing. So we say that would be our logo actually. Okay. So it's kind of the same family than koala. It's a marsupial actually from there.
Okay, interesting. Okay, so what are the so the whole platform, you want to walk us through kind of the economics, how like how the business works, like what's the what are the numbers like? I don't know, Tim, or you guys want to go together, or how do you want
to? Sure. Now, Fabrice, you can talk generally about what the the B2B model looks like. So I'll let you do that.
Yeah, there's different business models. Actually, it's very exciting time for digital health. I think in 10 weeks in 2020 we did maybe a 10 years jump for health and digital health, and this everywhere. It was already the case in the US, but in Europe there is a big steps we have done in terms of regulation. Regulation is very positive in many countries of Europe right now to develop and to deploy digital health, because you have reimbursement for digital therapies, for example. We just have an announcement 2 weeks ago that patient remote monitoring will be totally reimbursed. So this will open for Alakin a huge market, actually already in France, but in many other parts of Europe. Digital therapeutics are already reimbursed since January 2020 in Germany, and we have already about 50 applications that are reimbursed. It was the case also in Belgium, and it will be the case in France starting January 2022.
So can you talk about some of these numbers, like is it how much per patient? Like if you can just help people in our audience, the investors, kind of to understand, like how what are the economics, like how much do you get per patient, how much does Tech to Health make, like, well, and how big the market opportunity is.
You want to go, Tim? I go?
No, continue. You're doing great. Yeah.
What is interesting, for example, when we take let's take first the vertical KUKA in mental health. What we are really working on is to be recognized as a digital therapy. It means we are starting clinical evidence and clinical study starting in January. It's about 9 to 10 months clinical studies to get the, I would say, to prove actually that our service is the right service. It's really efficient for the patient. It's efficient for the care teams. Then you pass through the regulation in terms of the ethical regulations. Whoops.
Looks like he's having.
Drop the computer.
There we go.
Fabrice?
Yes, I'm here, but it's just my computer that dropped. Here we go again.
Okay, that's what I thought. Okay, perfect. Okay, this is
I don't know
part of
what
the fun.
happened.
Okay,
Sometimes it happens.
no, it's part of the
You know.
entertainment. So, okay, so basically, so what are the numbers? Okay, so right now you're going through a it's like a testing phase before you go live with customers.
For KUKA, we will go live, or we are already live actually for, I would say, corporate mental well-being or mental health prevention with the platform. So we have some new customers. I cannot say one of the big player in France because they don't want to announce anything officially for the moment. But it's a very big company from the CAC 40 in France. They want to deploy solution in mental well-being, but also in health prevention for 170,000 employees. So the needs is quite big on that side.
So just I should just say for people in the U who don't, the CAC 40 is like the Dow Jones. So it's a big company. It's like the Dow 30. The CAC 40 is like the Dow or the TS. I don't know. TS. I think the TSX has their top 30, whatever. So it's a big company basically.
Yeah, it's very big corporates. I mean, all big corporates today wants to do something about.
So you have a signed contract with this company.
Yeah.
To deploy. Okay.
Yeah. We start normally January 2022. We will start the contract.
Okay.
So we're already in different languages. So they will give access to their population, actually their employees, to the app. And the app has to offer coaching for mental well-being, but also in different clinic prevention. So in place of having a medical care team, we will have more specialist psychologists, personal trainers, nutritionists, nurses, directly to the to help them actually have a program about what they want to improve. So it can be mental health, it can be personal development, it can be nutrition. It's quite efficient on the whole clinical evidence of prevention.
Okay, and okay, so how do you generate revenues? So the contract is signed. Now, do you get, like, is it per patient? Like, what are the numbers like? How much money are we talking about?
Well, we do a revenue by asking for actually a fee per employee per month. And generally, we sign contract for 3 years. So it's always a minimum 3 years contract.
Okay.
Jack, if you remember when I was on the show last, we talked about how within about a month of Fabrice launching this version of the platform, he had 3 contracts in place. The one with this industrial corporation that he's talking about right now, and that's on a per session basis, meaning they'll provide a certain number of live feed sessions to the company and get paid on a per session basis. The other contracts are with insurers, and in those cases, it is the insurer that will reimburse for the uptake or the use of their insured clientele that are using the services that are provided by Tech2Heal. So it's a blended model of some of it of fixed negotiated income, and part of it is based on a per use basis. And we had come out with a projection which we announced, stating that over the life of these contracts with these first 3 companies, we think that it's realistic and not aggressive at all to assume that we're looking at something in the neighborhood of about 5 million of revenue from those first 3 contracts. And remember, those were 3 agreements that were signed within the first month of going live, and so it's just the start
uptake. So if you got so this is very interesting. So if you got 3 contracts like right out of the gate, so it means that the market is interested in what you have. Apparently, I mean, otherwise, usually these things are long sales cycles. Usually it takes a long time. I mean, I know in the US, I'm sure in France, it's even more like bureaucratic and people are more conservative, like They really want to make sure everything works. So it's impressive that you got 3 contracts like this right out of the gate. How big is the opportunity? How big is the market opportunity that you're going after? Can you get, 100 contracts like this over the next, 2 years? I mean, what's the size of it?
Difficult to say, obviously. I mean, that requires, some crystal ball gazing. But what I can tell you is that oftentimes what will drive the uptake with a service like this is a government being involved in a payer model, and that's what's come into effect here in Europe now, where the governments have stepped in and said that digital mental health care is in fact a priority, and both the government is now reimbursing, and they're mandating that private insurers and corporations must reimburse the digital mental health care, in the same fashion that they do with the old-fashioned brick and mortar walk-up healthcare.
So Tim, this is the big. So apparently, this is the new thing. This is like the big driver, the big tailwind pushing this market. From what I understand, I think we talked about how much per patient per year. Is it 2,600 euros? How much is the reimbursement?
So when you're talking about the therapeutics, it is 800 euros per quarter per patient. So is that number's correct? So 3,200 euros. So roughly $3,500 US.
Even more. It's almost $4,000.
Yeah. So there, depending on the exchange rate at the time, but and that's per patient per year, and that's now the standard set within Europe by the various governments. But what Fabrice had just touched on a minute ago, and we need to stop and appreciate the importance of this too, with respect to the Alekhine product that we were demonstrating earlier, and that's that the French government just announced in the last 10 days ago or so that that they will now reimburse for the use of these digital remote patient monitoring platforms like Alekhine starting January next year. So once again, you have this top-down motivator by the payers, where they want to see systems like this being used and prepared to reimburse. And that's
Tim, it's interesting because this is like we have another company that's in a sort of in a similar model, which in the U.S. that operates in the U.S. and they were a little bit early, like they were like a pioneer in the space, and now that Medicare, Medicaid, those things are doing reimbursement, it's really driving massive, it's massive revenue growth. It's really the inflection point, and this is kind of where AIML and Tech2Heal is like you were a little bit early and you caught it. Like now is just as the market is taking off. Now that you have this reimbursement, so it's a really it's a major inflection point. So we're going to see.
You're absolutely right about that. Number one, and number two. Unlike the U.S. that had, a pretty good head start into the digital healthcare market, and the U.S. is the U.S. So there's very much this entrepreneurial spirit. There's a lot of venture capital out there, and so as a consequence, there's been a lot of companies in the digital healthcare space in the U.S. that have
too many. There's actually too many in the U.S. right now.
Europe is not like that. Europe is still wide open, the Wild West, and I can tell you that there's a very, very small handful of competitors to what Fabrice is doing right now. So there's a huge market opportunity that is open to him, both in Europe. But the other thing that Fabrice has some very good inroads and previous experience in this area in South America as well, and there's some good dialogue going on as we speak with some significant players in the South American healthcare industry as well. So Tech2Heal is poised to make its presence known both within Europe and within South America, and we've created the new alliance to take it forward in North America as well. And we've got some good conversations going on there also. So it's an exciting time for us for sure.
Okay, no, so the market opportunities is definitely massive. So what do you see as for Tech2Heal? Like, I know it's a little bit early, but again, you've already signed 3 contracts, like right out of the gate. So can you maybe make some projection? Like where do you expect to be a year from now? Like how many, what kind of revenues could you be generating?
Yeah, it's a difficult thing to do.
Because people can extrapolate. Okay, if they got 3 contracts in the first month, are they going to have 50 times this in the first year? I mean, I don't know. What are the numbers like?
The potential is there for sort of massive growth over the next couple of years for sure. Beyond a doubt, we haven't begun to even scratch the surface. I know that just of the list of potential users that Fabrice is in dialogue with currently would add several times as many users as what he's been able to sign to this point. So there's just tremendous potential. I think that's a fair comment to make at this point.
No, well, Tim, you've always had. I mean, like it seems like every month or so you always have like some upside surprises coming in. So we're expecting some more upside surprises coming in. So with that said, we're a little to wrap up. Two last questions. What's because we haven't heard from AIML in a while. What kind of milestones, what kind of news flow can investors expect for the next into the end of the year? What else from Tech2Heal? What kind of things do you have in the pipeline?
So I'll let Fabrice address that, and then I'll talk with respect to HealthGauge and other things that are going on. But maybe Fabrice, you can give just a brief overview of what the next several months hold for Tech2Heal.
Yeah, I think we need to create a lot of value in the market if you want to be a player that would be the winner in the market. So on the tech side, we work a lot right now on the interoperability of the system using FHIR protocols, using OMOP protocols. So we'll be able to work with clinics, hospitals, but also with the pharma industry and the research industry, because we collect a lot of data in this platform. And the second thing that would be very important for our users, patients, and care teams, the intelligence, the prediction we will be able to give in the platform thanks to the data. So we are organizing the team to really work on the business side, on the clinical side, what we can offer to our patients and what we can offer to the care teams in terms of value with the data. And we have a lot of ideas about that. Patient record is nice, but if you visualize the patient record in a new way, that can be very well understood very quickly by the care team, for example. It can be very useful for them. If you cross the information, if you cross data from the patient, but also external data, you can develop new algorithms that will be quite interesting for the care team, actually, to take some decisions. So we really work on the tech side, and the interoperability of the system is very important. And you will see that in the next 8-9 months in Europe, and especially in France, everybody will say you need to be FHIR. If you're not FHIR, FHIR, which is the protocol for this interoperability that is used now almost will be out of markets. So it's very important to be before. So we already work on that part. And then we have there's a lot of cool for projects with corporates, governments, hospitals, and we are very integrated right now to this ecosystem. I cannot announce many things today. I'm sorry about it, because I prefer to announce when it's done. But nice surprise can come in the next weeks and month, actually, with some partnerships we are dealing right now that are very, very, very interesting, and will be certainly quite a rocket for us, I think.
Okay, so it sounds like there's going to be some positive news flow. Now you have the contracts actually starting in January, and I mean I think what investors are going to be looking for is more signings, more contract signings. You know, the uptake, how that's going. So it's some exciting news. Tim, what else is coming in from AIML in the next?
Sure. So the one thing that I would just add to what Fabrice said on the Tech to Heal side is stay tuned for some substantial pilot projects with some significant potential users that are waiting for this Alakene product rollout, waiting for it to get to the point where it is now, where they can start to do some pilots with it. So expect to hear from me with respect to some interesting pilots with some significant medical facilities throughout Europe, and some other ventures as Fabrice was alluding to a minute ago. So there's a lot going on the business development side on the Tech to Heal. On the health gauge, also same thing. So stay tuned for some imminent new developments on the strategic partnership side that are going to be really fun and equate to some near-term cash flow that looks to be potentially very significant for health gauge, and it's in final stages of details being worked out, and so stay tuned for news going forward on the health gauge side on some new significant partnerships that they're entering into. That's one thing, and as always, I've got other ventures in the hopper that we continue to do our due diligence and our negotiation, and they're companies that are in the same space and complement very nicely what Fabrice is doing and what HealthGauge is also doing. So stay tuned. That hopefully, fingers crossed, that things go well with the final stages of negotiation and closing on some other acquisitions that we've got in the works going forward as well.
We get an audience question. Last question here we have. Michael's asking, what is the time frame for the pilot project for Tech to Heal? He wants to make some money.
I like the next one. I want to make some money.
He likes the share price right here. So basically, that's what
exactly. Fabrice, you might want to address on the Tech to Heal side with respect to some pilots. What we're looking at.
Yeah, we start some pilots first quarter of 2022. So that would be the start of the first pilots. And outside the pilots, there could be also a big partnership that we will announce until the end of the year. We are expecting an answer very quickly. It's a pilot project, but it's a big pilot project that could, I can just say just little think about it, but we are talking about smart glasses connected to our platform. And this is
AR? Is this like AR type stuff? Augmented reality?
No, it's more linked to the technology of the lenses. A very new technology of lenses, actually, to work on the problem of night shift for the workers. So they have a lot of problem of sleep disorders, and this is a new technology we are actually building. Not the wearable on the device. We are on the software platform that is based on Alakene, and we are on a big pilot that could be announced soon, actually. So we are expecting this would be until the end of the year, and there's a very quite a high potential on this kind of niche market. Night shift is something that concerns a lot of work, actually, and very solution to help them.
Okay, so let's leave off on that. We'll leave something for people to look forward to that news. So thank you guys, and we'll catch up with you hopefully the next few weeks with some more news, Tim. And
Sounds good. Looking forward to it, Jack.
Thank you guys. Okay.
Thank you. Goodbye.
Thank you, Fabrice. Okay. Okay. Let's get ready for Organic Garage. Let me just get this set up here. And okay. Matt.
Hey, Jack.
Matt, can you hear me okay?
Yeah, I can hear you. Yeah, can you hear me?
Okay. Yeah. Okay. A little bit. Okay. Let me get this. Yeah. Keep talking just to make sure we have good sound.
Yeah, can you hear me?
Perfect. Perfect. Okay. So, we got a little show and tell behind you. What is that behind you over there?
It's one of our signs, our old
Okay.
signs.
Aha. Okay. Okay. So you're in one of the stores. Okay. So
Yeah.
let me just get set up before we start. Let me make sure we have everything on the screen in place. A lot of exciting news today. Okay. Okay. Okay, Matt, I'm just going to do a quick little countdown, and we'll start in 10 seconds, okay?
Yeah.
Here we go. Okay, here we go. Sorry, Matt, I just, we get it. Now we got this, okay. Okay, now there we go. Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, October 28th. We are back with Organic Garage, OGGFF over the counter, OG on the TSX. Matt, welcome back.
Jack, good to be here. Always good to sit down and talk with you.
Fantastic, Matt. Actually, I want to get lower the camera a little bit, so we're at eye level. I just realized we're a little bit off. Before, okay, perfect. Okay, this is as close as we're gonna get right now. So, great. You have some really impressive news in the market today. Surprisingly, the market hasn't reacted to this, which I think is, I would say this is like a key inflection point. You've announced that essentially you're going to be expanding. You're ready to scale right now with more stores. Potentially this could be. We talked before. This is what you have as a global brand. So, this is really like the beginning here. So before we get into that, like for anybody that brand new tuning into our program for the first time, our goal with the Wall Street Reporter's next Super Stock live stream is to bring you those stocks which have that 10x to 100x upside potential. Companies going after massive multi-billion-dollar market opportunities that are at a key inflection point and have multiple catalysts in place to ignite that increase in shareholder value. We've already had 9 stocks that are up between 10x and 50x in the last 18, 20 months. I think Organic Garage has all the key ingredients, Matt, no pun intended, key ingredients to be that next 10-bagger plus. So we're going to go into some quick, get a quick update. And everybody watching, please ask your questions in the live chat because the questions really is what makes these events special. And decide for yourself if you think Organic Garage is going to be that next 10x to 100x winner. So Matt, with that out of the way, you put out an announcement today that you've engaged, what is it, Savills, which is the major commercial real estate firm that people tenants use for big deals. So walk us through that. You're hiring them to start scaling out locations, starting with Toronto, the greater Toronto area, as a starter.
Yeah, yeah. Yeah, so just building on what you discussed. So we've engaged Savills. They're a world-renowned real estate company. They handle billion-dollar brands in terms of finding real estate, commercial real estate. And, we've had a direct and indirect relationship with them, since we've been a publicly traded company, but engage them to formally go out to the market and to start soliciting potential sites. Since COVID happened, we've been contacted by numerous landlords and different varying discussions.
It's a buyer's market for you, right?
Absolutely.
This is the perfect time to be expanding.
Yeah, so we were always in varying conversations, but we realized we need to take a much more focused and direct approach to take advantage of the opportunities in the market. So we engaged with them. We sat down. We plotted out the Toronto and Greater Toronto area to take a hard look at where we want to grow, how many locations can the area support, and today's press release shows, the geographic map that easily shows just in the Ontario market 20 to 30 locations, and we're not even fully filled out in Ontario. There's areas that we haven't even touched yet. So the potential in Ontario, we've always said, as Canada's most populous province, has a ton of potential for us to become like a national leader in the organic and all natural grocery business. And then once again, as we build the brand, the opportunities that exist, potentially outside of our domestic market, like we touched on our previous interviews, the brand is there, and now's the time to take advantage of kind of how the market has continued to evolve and capitalize on the opportunity that's presented to us.
Okay. I think it's very important for investors to understand really, like, okay, any major retail brand, whether it's like, Walmart, Home Depot, Whole Foods, you name it, they all start off first with targeted, in a targeted area. They build out the stores. You kind of get, you kind of show the market that you could scale, and then you can really. Now you already have 4 stores. You're generating what, 25 million plus.
Yeah.
I think 30 million, 20. I mean, the numbers are there. And now what you're saying is and now you're saying that basically Savills, now these guys, they do like really, serious research, demographics, everything. And they've come up with, they're saying that you potentially can the market can support 20 to 30 organic garage stores.
Yeah, just in our home market. And you are right. I mean, we analyze the market. We look at things like population density in the towns and cities we evaluate. We look at average household income. We look at education level. We look at ethnicity. Those are kind of our 3 or 4 key criteria. And then we map it out. And our goal was to create in the Toronto and Greater Toronto area. I would say actually in our map, it shows 4 territories, but I would say it's actually technically 5, because Toronto itself, being the downtown area, counts as its own territory. And our goal is to have between 5 and 6 stores in each territory that are supported by specialists. And so when you see on the map, we chart out a 45-minute drive time between locations, which makes it easy to support logistically, from a management support level to supervise, those 5 or 6 locations in each territory. And so when we mapped it out, it became very apparent to us, the potential for the market, given the size stores that we're looking for. And like we discussed in our previous interview, the beauty about the real estate model that we have is I like to say, we're too big for the small guys and we're too small for the big guys. And so we've hit a real sweet spot in this 10,500 square feet where, Jack, you touched on it. We could be beneath a condo building. We can be in a suburban strip mall, but we're not competing with the big boys for real estate and taking, D, E, and F sites, because we gotta, in terms of the pecking order, and we're too big for the small guys. So we're able to take advantage of sites that they couldn't take advantage of. And then, coming out of COVID, unfortunately for some, but fortunate for us, some businesses have closed. And, whether it's like I mentioned it before, like a buffet restaurant, it could be a general merchandise store, it could be a clothing store.
There is a ton of real estate. I mean, forget about, I don't know about Toronto, 'cause I haven't been in Toronto in years, but like in the US, anywhere you look, that size space there's a ton of it out there. I mean, like if you walk in, like, I don't know, in Manhattan, there's like you have they would pay you. They'd probably pay you like, to take one of those spaces. Because again, one of the things that landlords love about what you do is you're really a value add tenant. I mean, it adds value to the building, to the property, the surrounding area. It's really, it's a wonderful thing. So these guys are saying you can open up, the market has, it could take on at least 20 organic garage stores. And by the way, that's in addition to other supermarkets, whatever is out there, right? So they're saying the market can, okay. That means, so for Toronto, those 20 stores, which would get you to a total of, I guess, 25. So that would get you to, what are the numbers? How much does each store generate?
Our goal is always between 6 and 8 million a store. That's our kind of sweet spot. So, you're talking 125 to 150 million in sales, and we're a big player. That is a lot of stores and a good sized company that is very, very attractive. And like I said, that's conservative. We outlined the towns and cities in our press release based on the mapping we did, but some of those towns and cities, like we listed Toronto as one. Well, Toronto alone Toronto proper could fit 4 to 6 stores. A town and city like Mississauga, which is our second most kind of populous town and city in Ontario, can fit at least 2. So some of those are multiples as well. So all we've just basically done is put, I like to say, it's kind of jokingly, like the bat signal up to landlords, real estate agents, and developers, and saying like, look, we're out there. We are now formally looking. Where informally we were definitely in the market before, but we are now saying, hey, look, and Jack, I think you hit the nail on the head. We know our model. We know what goes into a store. We have jokingly the binders, the spreadsheets, the graphs, and everything that we need.
Yeah, the system is in place. Yeah, the
systems are in place.
And you're like here's the thing. So landlords, not only do they love the concept of what you're doing, but also, you have a proven track record. They know that these stores, you're not going out of business. When these stores open up, they're going to be there for decades. I mean, this is the type of thing that is.
Well, grocery stores are anchors. They're anchors to communities. They're anchors to developments. We're long-term tenants. And when you're looking from an attractiveness from a developer, standpoint, grocery stores are tremendous traffic drivers for their plazas. So incrementally, when you look at the other things that might be in their development, a QSR restaurant, hair salons, places like that, all that they can get premium rents on because there's a huge amount of traffic being driven to their sites with a grocery store. And the type of clientele that we're driving to their sites are premium clientele. So even though we're a value operator, we are driving I call A tier customers.
It's not like you're not like a vape shop or a tattoo parlor, basically. So it's it's a value added tenant.
Well, when you're looking for accessory tenants, you're potentially, as a landlord, you're able to get a different style of accessory tenant than you would with potential other, anchors. So it's a trickle down effect. And that's why, I touched on it before in terms of our financial model, and people always say, well, how do you get the landlord to give you money? Well, we get the landlord to give us money because we're a long-term tenant, we're a grocery store, which is a huge traffic driver, and we're able to drive incremental profitability on the other tenants they potentially have in the development. And in today's day and age, coming out of COVID, grocery stores were proven as pandemic proof. They were the only businesses that stayed open pretty much 100% of the time because people need to eat. And so, if you're looking for something that's stable and long-term in your development, you can't get better than a grocery store. And so we are in demand.
Especially with your brand, the whole organic, the whole thing is just, it's a really incredible thing. And again, again, landlords, they're very sensitive to, okay, what do they call Amazon proof? This is Amazon proof. You help the whole surrounding. So it's a fantastic thing. So the big question now is, okay, so with these 20 stores, you could be doing 160 million annually in sales, right? And these are all big margins in this business. The question is, how fast can you get to these 20 stores and then go from there? How fast can you open up these 20 stores, Matt?
Yeah, well, look, store development is predicated on available real estate. And I think today's press release, I wouldn't say it's the start of the snowball turning because we've already started it, during COVID on our own in terms of our own conversations with prospective new sites, but this accelerates things. An announcement like this will be picked up in trade magazines not only in our own industry, but in the real estate community. And then, depending on how fast sites are available is how fast we can scale the business. But going back to my point and my quote in the press release, and, it's a valid concern from any potential existing shareholder or new shareholder is look, we're going to be smart about it. We're not in the business of over diluting the company. We want to be smart and sustainable with our growth. It takes 6 months to build out a store. So for us, it's filling out our calendar of development and making sure it meets, kind of the financial resources we have on hand so we can do it in a sustainable way. But look, I said it before on this program, we are a growth story. There is nowhere but up for organic garage bricks and mortar, and we'll touch on it soon in terms of our other business, the Future of Cheese. But
Yeah.
we are at the beginning of our growth cycle, and the growth trajectory and the runway for growth is huge. And so today's press release just proves that potential. And our goal now is with Savills is to start to fill out that calendar in terms of new store development and reach the potential that the brand has in our domestic market here.
Okay. And by the way, I'm gonna dive into that. The brand's Future of Cheese, kitchen
originals.
Because of that show, I always that thing with the kitchen cafe. Okay. So what happens is we're gonna talk about like there's tremendous synergies when you have these powerful brands. You kind of have this flywheel effect driving the growth when you have many stores. You're selling your own brands. We'll get into that in a second. But okay, so essentially, you're saying you can grow as fast as locations become available. So in theory, let's say in theory, Savills comes to you and says, "Hey, Matt, listen, we got 50 calls that came in, inbound calls this weekend that came in from landlords, phenomenal locations. They're willing to give you, I don't know, a year free rent, tenant, whatever, the whole thing, right? How fast can you open? Let's call it 4 stores. Because you don't have to do 6 months, then do another. I mean, you could do several stores at once, right? You could do 2 at once.
The stores to build out are they're very simple. So going back to the systems we have in place and what we've learned from the 2 stores that we opened since we've been public in terms of trialing things there, we know exactly the inputs that need to go into a store. So physically building the stores is not an issue. And you are right, Jack. I mean, we have the construction team in terms of the contractors and tradespeople we deal with that can build multiple sites at once across in our domestic market. And look, these are national construction agencies that can build out of province as well. So we've teamed up with the right people. They know our finishing, they know our expectations in terms of store execution. We know our branding style. So yes, absolutely, we can build multiple stores at once. And it's the job of Savills is to understanding our financial criteria, and what we're asking for is evaluate all those 50, 100 inbound calls they're going to be getting for the communities that potentially didn't realize that, hey, look, could we be a target for an organic garage? And now we said absolutely you are. So I think it's a very exciting time. I know Savills is really excited to hit the ground running on this. And I know from, incrementally the leads that we've already passed along to them from, during COVID time to now them going out and now being able to formally speak with everybody. It's exciting that they'll be able to be, our representatives in ensuring that we're evaluating sites that fit our financial criteria. And you are absolutely right, is grow based off the real estate availability. And we touched on the financial kind of structure before, but I just want to reiterate is that between landlord inducements, financing of equipment, because grocery stores are very equipment heavy, which is excellent for third-party lenders. From a CapEx standpoint, it is very minimal in terms of what we need to be able to scale the business. Are we in a position to, if we got an enormous amount of sites that we want to take advantage of and accelerate our growth, are we in a position, we mentioned it before and people know that we have a shelf prospectus out there that's for the next 25 months. Yes, but it's only for us to be in a position if we felt there was a great opportunity to accelerate our growth. But with our existing cash on hand, our access to third-party lenders, the landlord inducements that we get access to because of the style tenant we are, we're able to fuel, the growth that we see in the short term ourselves and not do anything that's going to be overly dilutive to an investor, unless an absolute, we could explode in terms of our growth cycle, which would be good for investors and shareholders.
Yeah, no, Matt, you address probably. It's interesting. I find sometimes some of these like investors, there's this paranoia about, oh my God, there's going to be dilution or this or that. First of all, there's a couple things. One is, they see that you have this prospectus in place. Again, like you said, it's not going to be for 20. And this is good for 25 months. There's not going to be any offerings right here. Obviously, you haven't raised money at these levels, so likely you're not going to raise money at where the stock is right now. You have $2.5–3 million cash in the bank, so you don't need to do it. But the main thing I think which people need to understand is to open these locations is not going to cost. And we saw the total cost is about $1.5 million. It's not going to cost. You're not going to lay out $1.5 million in cash to open a location. In theory, you could open a location for like almost no cash, because you could probably get credit lines. I mean, you can get credit lines. Each store generates cash flow. You could support. It could service whatever debt is out. You have margins, and you have big margins. You could support the debt. You have a strong balance sheet. So in theory, you could do the whole thing you could finance the whole thing.
Yeah, and I think people get the wrong impression. We'll say an average store costs 1.6 to 1.8 million, and they figure the day you sign the lease, you're at 1.8 million. Well, you're not. So first of all, it's a 6-month build out cycle. And if you were to divide it, it's fairly equally over the 6 months in terms of the money pull. So when you're talking about a pull on your cash flow, it's relatively minor. Add in the fact that you're right. Whether it's an equipment lender, a bank, whoever we choose to deal with to finance, the hard assets, and equipment and things like that, it frees up a tremendous amount of free cash flow to continue to build multiple sites at once. So, from an investor standpoint, it's very important they understand, when I say 1.6 to 1.8, that is not out of pocket the day we sign the lease. And remember, if you work backwards from there in terms of inventory and stuff, we're only loading the store literally 2 weeks before the store opens. So when you start to work backwards in terms of the physical cash out of pocket, it is very minimal during the build out cycle. And you're absolutely right, Jack, with the financing options that are out there that we can access with our free existing cash flow, with the fact that we continue to cash flow, it gives us tremendous flexibility to look at multiple sites at once without somebody trying to do the math and say, well, Matt, it's 1.8 million a store and you have even 3 million in cash. Well, you can only build 2 stores. Well, no, that's not the case, because I'm not out that money and I'm not cutting a check for 1.8 million in day 1 of our build out cycle. Like, it doesn't work like that. And so I think, hopefully from an investor community, they understand some of these points, because some people, obviously put out the wrong information, and that's not the case at all.
Yeah, it's really, listen, Matt, I'm glad you're doing this live stream, because I think like right now in the microcap space, like in Canada, it seems like from the comments I've read, like people really believe like, oh my God, like it's going to be dilution. They're going to raise, they're going to do a raise right here at 30 cents. There's going to be, it costs, $1 million. People are not. So 2 things which I think are very important for people to understand, and you kind of touched on it. It's really important in the retail business, when you're scaling retail, when you're going from, let's say 5 stores to 500 stores, whatever it is to have those systems in place, which, franchises have. Now, you grew up kind of like your initial work experience, business experience was in one of the premier franchises. So you've been like indoctrinated in the whole mentality of what it takes to go, grow a massive thing. How important it is to have that discipline, these systems. Like, for example, you just said something interesting. Like, when you open before you go into a store, you know exactly what the build out is going to be, this is not like a business where somebody's starting from scratch. They gotta they don't know. You're not reinventing the wheel. You already know exact. It's like a Starbucks or McDonald's. They already have again, like we talk about the binders, everything in place. Here's how you do this, and that. This is where the lighting needs to be. This is where they have it all figured out. They don't need, they can hit the ground running and they're off to the races. At the same time, they know exactly how much, basically, exactly how much cash flow you can predict. This is a very predictable business. I mean, maybe Tuesday might be a little bit slower than, Friday, whatever, but it's very predictable. So you can model things out. This is why banks love it. This is why.
Yeah,
again,
we what I need them to do based on our financial model, and going back to the build out process. Yes, we know exactly in terms of the inputs that are needed. Even to the point, sorry about that, even to the point where we can pre-book equipment far in advance to keep ahead of our development cycle, because we know the exact equipment down to how many shelves, what is the trim, everything that goes into a store. We can prefabricate in advance to keep up with our growth. So it from a store build out standpoint, it is very simple in terms of the model we have now, and it is predicated very much on the things I learned firsthand in my previous experience with Subway in terms of the inputs that go into store locations. We have our designated suppliers. We know what we purchase from them. We know what we need from them, when we need it, how long does it take to get it. And even in today's strained supply chain, we're still able to project out in advance because we don't have to necessarily wait for a store fixture design to know exactly the inputs and equipment that we need. So yeah, you're absolutely right. I can't stress it enough. The systems are there. And from a CapEx standpoint, once again, I just want to alleviate everybody's concern. A lot of people potentially come on programs, and they're not the founder or they're not the largest shareholder. I'm the largest single shareholder in the company, and I'm not in the business of doing anything that's going to be overly dilutive at levels that are not beneficial to shareholders. We're giving ourselves freedom and flexibility for our future growth plans. And that's a prudent thing to do given the opportunity that exists in today's market. And, today's announcement speaks to that, or the opportunity that's at hand that I think should be very exciting for any shareholder or investor looking at our company.
I think, Matt, listen, the proof is, for any investor who has any doubts about, the proof is you have $2.5 million in cash in the bank. This is not like one of these micro cap stocks where, they're running on fumes. They're borrowing from Peter to pay Paul. They don't know, obviously you run a very tight ship. Otherwise, if you didn't run a tight ship, you wouldn't have $2.5 million in cash right now in the bank. So it's pretty obvious. So I mean, yeah, and is it? Go ahead.
No, I was just going to say, and it's very important for people who have followed our history to understand that the changes that we made during COVID in terms of the free cash flow that it opened up for our company, switching from a centralized to a decentralized distribution facility saved the company, $1 million plus on our P&L. So we are the leanest and, it's meanest, but leanest we've ever been as a company in the history in terms of, nothing dragging on our P&L. We have the foundation in place now that we've exited out of that centralized distribution model and exited out of the cost, everything from the lease to the utilities to the labor and everything that we had, which were input costs with our centralized warehouse that we previously had, are all off our books now. And so from a free cash flow standpoint, from a cash in the bank standpoint, we're the healthiest we've ever been to be ready for this point. Which you're absolutely right, Jack, is a kind of a bellwether point in our company's history to say that we're primed for growth. We've seen the opportunity in the market. We've seen how important grocery retail is. And I'll stress it again, and we touched on this on a previous interview, the opportunity that exists in the specialty food space, the specialty grocery space, which we operate in, which is the only real segment of the industry outside of ethnic foods that are growing, very healthy levels, double digits, that is attractive from an acquisition standpoint, potentially, if that's a route that we want to go down the route in the future. But it has shown itself to be attractive. Now is the right time, and the right time in our company's history to take advantage of the opportunity that's ahead of us.
The market you're in it's like, I don't know, hundreds of billions of dollars for the space you're in. It's one of the hottest areas. So here's the question. Let's say Savills calls you up. They got a bunch of locations, and they say, hey, Matt, look, these things, we got these 50. You drill 4 of these locations. They're going to say, look, they're ready to do it, whatever deal you want. how fast can you open, let's say, the first, I don't know, would you do 2 at a time? Let's say, can you do 4 at a time? I mean, how many, with your existing resources, let's say, here's the question. Okay, here's the question. With the existing resources that you have, how many stores simultaneously do you feel comfortable opening without any raising of capital?
Yeah, it depends on, occupancy cycle, but going back to my point, it takes 6 months to build a store. So from the moment you start, you get the keys in your hand to the moment it's open with your first customer buying a product, it's literally 6 months. So how those stores overlap in terms of their occupancy dates and things like that, it's dependent on, once again, the signing of the lease and when do we take occupancy and the landlord has done, whatever prep work or things that they have to do. In terms of a construction team, our contractors and stuff, they're able to handle as many sites as we need to give them. I mean, these are companies that build for the largest grocery chains in Canada. So there's no concern in terms of a trade availability standpoint in terms of physically building the stores. And going back to an internal resource standpoint, once again, a 6-month horizon gives us more than enough time to not, and I touched on this before, look, we could build out the resources internally to sustain 30 stores while we're still 4 and have it weigh on our P&L. I'm not interested in doing that. What I'm interested in doing is adding incrementally to our management team, predicated on the store growth cycle, so that we're doing stuff fiscally prudently. And so a 6-month horizon from the moment we take possession to the moment we open gives us more than enough time to add any of the incremental support stuff that we need to help manage stores. So, from a construction standpoint, they can handle as many stores as we want to give them. From an internal resource standpoint, all our senior staff is in place, but we're adding a support staff, and we add that support staff in combination of the store opening cycles. And from a cash flow standpoint, it just depends on how the stores overlap in terms of what resources we'll actually need.
But what's the number? Yeah. What's the number, Matt? How many stores do you feel? Let's say you had these 3 or 4 great leases. Do you feel comfortable signing 4 of them? For this Friday.
This Friday? Yeah, I would say, Jack, yes.
Monday, I don't know.
Without understanding the financial details and everything, the multitude of variables in it, all I can say is from a construction standpoint, from an internal resource standpoint, and from a free cash flow standpoint, we're in a great position to handle if multiple sites came at us all at once. Absolutely. I think what we're looking at is, over the next 12 to 18 to 24 months, what is out there in the market and how can we fill up, our development cycle to meet the opportunity that exists that we see very, very clearly.
Okay, but can we say that you'll have, let's say, can we get to, let's say, 10 stores, leases out, basically, leases out, construction, scheduled, getting to that 10 store number by, let's call it August.
Yeah, I would never want to predicate a timeline. It's hard to say because there's so many variables. All I can say is it's in terms of, what opportunity is out there. And now that we've made it very formal, I think things will kind of crystallize very quickly in terms of that development cycle.
Okay, you don't want to be painted into a corner, is what you're saying. Okay, I get.
I'm politely saying that. I do not want to be painted into, especially because these are things. As much as there's certain things in our control, there's things out of our control, and the availability of real estate comes at different times. You could have tenants exiting out of sites where a landlord says, "Hey, look, I got a tenant whose lease is coming up in 6 months, but I want to put you in." There's sites that a landlord has to prep in advance before we occupy. There's multiple kind of variables that are outside of our control. What we're saying as a company is we're ready. So let's start seeing the sites. We now have representatives that will be handling the inquiries that know our criteria. And so from that standpoint, it's very exciting in terms of what opportunities are out there. And now that we're formally saying, yes, let's see them, let's get them submitted, things could happen very rapidly.
Okay. So the bottom line is, so, the news is out. We're going to see what kind of deals, what kind of deals the landlords are actually coming back with. because you're going to be getting offers. You're going to be getting stuff. So we're gonna know in the next couple of weeks, right? We're gonna know like what's, you know, how desperate these guys are, what kind of inducements they're going to give you. But realistically, I think, Matt, I appreciate that you don't want to like, you know, you don't want to like say something which, you know, you don't want to make like any crazy projections. But I would, and again, you know, obviously you run a very tight ship, you know, operation. But I would think that you have enough right now. I'm gonna like, you know, that you could do 4 stores, you know, in the next 6 months easily without raising any capital.
Yeah, like I said, without looking at all the economics in terms of, you know, each site presents its own unique variables, financial variables. But going back to the point, do I think there's a lot of availability out there? Yes. And I think it's something, once again, you know, we're not in a position to handle all that ourselves, which is why we want to work with great companies, and Savills is a great company who can handle those inquiries and vet them and negotiate on our behalf. Do I think there's that potential out there? Yes. Do I think we have the financial resources internally and externally to access, to take advantage of, you know, 3 to 5 sites if they were to come up? Absolutely, yes.
That's the answer I wanted, Matt. That's it. That's the answer. That's okay.
Yeah, I think we do, you know, because they don't all happen exactly at the same time. It's not like they'll all be opening on the same day.
It's going to be over the next,
occupancy on the same day.
Yeah, it's going to be over the next 3 to 6.
But,
yeah, it's going to.
But things stagger themselves out. So do I think we have those sorts of resources to access if that's how many sites that came to our plate? Yes, I do. And like I said, going back to the cash pool, when you're looking at a 6-month build out, we are not writing a check for $1.5 million and then waiting 6 months for the store to open. Remember, when we have terms and conditions with our existing tradespeople, it is a slow burn on cash over a 6-month cycle. You're talking a couple $100,000 a month, depending on certain cycles. And when you're looking at alternative lenders and the things that we'll be accessing, the pull on our own internal cash flow is relatively minimal. So, you know, I'm excited to see formally what's out there. I'm excited for Savills to feel confident to go out to the market and know that they're representing us formally. And I think it's an exciting time, given the opportunities that I know firsthand, and that I also believe firsthand that are out there in the market for us to grow the business.
Yeah. So bottom line is I think the key takeaway today for people the number one, I think, takeaway from the message for today is you have right now, without raising any capital, there's enough resources right now, financial resources and everything else, management, organizational, operational, to open, you know, let's call it 3 to 4 stores in 2020. Let's say 2020. Let's say 6 to 9 months, whatever it is. Real, you know. So that's the thing, which basically means the company is essentially going to be doubling its size by the end. In other words, you're going to come out of next year at a minimum. At a minimum of double the size? Would you feel comfortable saying that at least? 2022. It's a year. 12 months is enough.
I believe that opportunity is there.
Okay, that's okay. No,
a lot of variables, Jack, but you know, a lot of moving parts.
That's without dilution. That's without capital. Okay.
But you know, the opportunity is there, and I think you know, investors should know with today's press release that we're aggressively out there looking. So yeah.
So what that would mean is, let's say, you know, essentially this is a company that's, you know, on the threshold of doubling. You don't have to say, I'll say. Basically, you know, Organic Garage is on the threshold of doubling in the next, you know, let's call it 6 to 9 months. And again, the market is forward-looking, so the market is going to be valuing the stock based on that double, probably in about 6 months. So essentially, the market is going to be projecting a doubling to, let's call it 60 million revenues. Let's say you get a 3x multiple, 3x sales. That's a private market multiple. It's not a crazy multiple. So that's $180 million valuation, which is 9 times where you are now. So basically, this is right here built in. It's like right there is your 10 bagger plus in the stock for anybody. Okay, so with that, let's go on to the next topic, which is but the big idea is you're not going to be stopping at 4 stores or 25 stores. Again, we talked about before in the previous videos. Organic Garage is a brand with global potential. I mean, with the margins, it's like the perfect thing, which can and it can scale globally through multiple paths. It could be through whether it's internal growth or it could be licensing. You could license the name to, I don't know, you could license the brand to, I don't know, Germany, Italy, whatever, the UK, Canada, not Canada, you're in Canada, Mexico, whatever it is, right? You can, Japan, you can license the brand, the whole, not just the brand, but the whole systems. It's like a franchise.
Yeah, it's a great brand. Look,
to an operator, the whole, the whole thing.
It's a great brand.
You might open 100 stores. The potential is unlimited. Now let's go into the next thing. Based on, okay, so you're developing also your own proprietary brands. These, should I say vegan? What would you say? Vegan brand? What are they? The future of cheese. Is that a vegan thing? Plant-based.
I mean, Future Cheese is a plant-based brand. Yes.
Okay.
So we acquired that company earlier this year, and for anybody following the markets and kind of whether consumer trends or in the stock market, plant-based is on fire. And we just saw a great opportunity with a fabulous product with a second to none management team, which was an opportunity we just couldn't give up. And so, very excited. First products are out in the market. The future of butter, salted and unsalted SKUs hit stores. Had a great initial response from retailers, sold out of our first batch within 48 hours. And now we're focused on, the next tranche of stores and scaling up, and working on our next SKUs, which, we'll be launching. So, from a revenue source in terms of a subsidiary, it's great to have them on board. It only fuels our growth internally. And from a public market standpoint, it brings great eyes on the story because plant-based is very exciting and it is not going away. It is a huge shift in consumer taste that we're looking to capitalize on. So it's from that side of the business, we can speak about the organic garage growth story, but the future cheese growth story is the upside is tremendous.
Yeah, I get this. I get the sense that, I'm excited about the retail stores, but investors want to hear about the plant-based, the brands. Because apparently in Canada, you guys, a bunch of these plant-based stocks have gone crazy. And of course, the US, we have, I don't know whether it's like Oatly or Beyond Meat, the whole kind of sector is very attractive sector. And so here's what's interesting. Unlike many companies kind of in the space, you're coming at it from a unique perspective because you and your team know from operating these stores exactly what sells in retail. You know exactly what it takes for a product to move off the shelf, right? So you have the future of cheese. Now, how many SKUs are they going to have? They started with cheese. There's going to be a line of cheese. It's not going to be just one type, right? Because you got the super cheese guy, right? The Mr. Cheese expert.
Yeah, we have Mr. Cheese himself, Afram Pristine. But yes, the company has multiple SKUs. They launched the first two, the salted and unsalted plant-based butter. We have a brie that will be coming out. They have a cream cheese in multiple flavors they formulated. And then there's other SKUs that are, top secret that we're excited, that we'll make future announcements about. So yes, it is a full brand, a full line of SKUs that, in terms of the two co-founders, Afram Pristine and Craig Hardy, you can ask for better co-founders in a business, not only from their own knowledge. Afram Pristine, for those who watch the Food Network, had a very successful program on where he traveled the world talking about cheese. He is the foremost cheese expert, I would say, in Canada, if not North America, and is turned to by many media companies, television shows to give his opinion and expertise on. Craig Harding is an executive chef, owns and operates very successful restaurants as corporate chef to companies like BMW. And so from an execution standpoint, from knowing what's on trend, what are eaters looking for, and most importantly, how do the products execute, Craig is the go-to guy. And so for the two of them, that two-headed beast, you couldn't ask for better. And so in our expertise, we lend them the direction of what is happening at the ground level. What are consumers talking about? And more so, because we're a retailer and because people are always pitching us to carry products, we're seeing products before they've even hit the shelves. So I know what's going on in the plant-based food space.
More than anybody, really more than anybody out there, I would say.
Absolutely. So, the ability for us to lend that expertise, combined with their experience and expertise, is a great situation for, a new product coming to market. You can ask for kind of a better situation. And from a shareholder standpoint, adding a brand like this in a market that is just on fire, gives the stock side of the business, the public side of the business, a lot of ammunition, and room for growth. So that's
Matt,
what's really exciting.
You know what? Okay, so what we're gonna have to do, and we're running really late. So what I want to do is I want to have you come back like next week, and we're gonna spend like the whole episode just on your plant-based brands, Kitchen Originals, Future of Cheese, because that's where a lot of investor interest is. We see there's a whole bunch of comments. People have a bunch of questions. We're not going to have time to get to the audience question today, unfortunately. But I want to next week we're going to go through all of that because here the big idea is this: is that okay? It is with the brand, with Future of Cheese, with Kitchen Originals. These are brands that you could scale very quickly. It's not like the retail stores. Look, retail stores, you can't really go to 100 stores, by next month. It might take you a few years to get to 100 stores. Whereas when you have a brand, a hot brand, I mean, you can go to $1 billion in 18 months. I mean, we've seen that with like, I'm trying to think what some of the brands I've seen, these food brands like, what's that, Chobani, the yogurt, or there's a whole bunch of them. I go down the list. There's a bunch of
CPG brands. Yes, you have
CPG.
a much higher accelerated growth plan, and look, plant-based gives certain opportunities that non-plant-based brands don't necessarily have in terms of transportation and things like that. So the Future of Cheese has global capabilities. Here in North America, Europe. And with Afram and Craig's kind of leadership and direction, you have two media personalities that can tell the story, better than anybody. And so it will be great, Jack. I look forward to talking more about it. Afram and Craig are eager to get on with you as well and answer your question. So
next week we're going to do a full thing, and we'll have them bring out the product. We'll have a whole, and I know a lot of people are interested in that. One thing I want to kind of wrap up with this idea is that essentially once you have, again, and I love the retail store, so I'm going to go back to the retail stores for a second. Because once you have a bunch of these retail stores and you have the brands, that's a really powerful combination, because then you have like this kind of growth flywheel. Because if you have 20 locations in a key area and you have your own products that you're putting out there with your own brands and everything else, you're able to promote the products properly, and that helps them gain traction at other retailers and everything else. And then it all feeds. It's a positive feedback loop.
Well, Jack, there's no better example. I think today, actually, we just launched a raffle giveaway on our social media for the Future of Cheese products. And I think we have 10 or 15,000 people on our Instagram alone, combined with Facebook. It's probably north of 30,000 followers. And it's just a great example of how we accelerate the brand. And we're able to do those things and leverage our own following to help the brands that we own and operate. So it's perfect that you say that, because it literally, I think it just launched today, the raffle giveaway. And this is how we intend to give the brand a boost. It is a separate subsidiary, and as much as it is ours, and we're actively involved in its growth, we do want to give it its independence, because it is sold in stores outside of Organic Rush. I know we get a lot of people that ask us, hey, is it only sold at Organic Rush? No, we will sell it to anybody. It has its own separate management team that is geared towards growing the brand. But does it mean as a retailer that we can do things for the people that follow us and are in our stores? Absolutely. And so we will do those things because it's our brand. So absolutely.
Okay, Matt. Okay, so we're going to come back next week. We're going to focus a whole episode on Future of Cheese and also Kitchen Originals.
I know. I got some of the products here for you.
Okay, perfect. And the whole idea of scaling everything else. I know we're going to have a lot of interest in that. Again, ton yeah, we're gonna have there's a ton of questions. People want to talk about that. So yeah, I apologize. I just got excited. I think the retail thing is by itself is like $1 billion thing right there, and it's a sure thing. It's right there. You know,
Jack, I think, you know, just to end off, I think you say it best. Look, the retail side, we have shown investors the ton of growth potential with today's announcement. This is not pie in the sky. We aren't a startup. We've been around for 15 years. You know, we're doing 25 to 30 million in sales. We're not a startup. So we're geared towards growth. And then on the future of cheese side, which we'll touch on, and I know there's a lot of interest, and you're right, I've seen the questions popping up. There is just a ton of growth potential. So when you're looking and evaluating us, I think the two avenues that we have to continue to fuel interest and growth are definitely there. And I think, you know, hopefully anybody looking at us is as excited as I am, because I think it's a great time for both sides of the business and for where we've positioned ourselves.
Okay, fantastic. Matt, on that note, thank you. And I'll catch up with you next week.
Absolutely. Thanks a lot.
Okay, thank you. Okay, okay, guys, sorry we were running late. Greg.
Yes. Can you see me?
Yes, yeah. Thank you for your patience.
No problem. And you have the share screen because I can't see you.
Yeah, here we go. Here we go. I got the share screen. Now let me just get things set up here for you. Where is the setup? Okay, stand by 1 second. Okay, just one more. So Greg, are we gonna talk about the acquisition? You want to do is this slideshow about the acquisition? You have a deck?
A couple of slides to talk about the company, then we'll get into the acquisition. There's about 3 slides. We won't go through the whole, you know, it's just a tool to guide us.
Oh, okay. So, you want to have that up on the screen when we're talking? You want to have the slides?
Yeah,
up?
yeah.
Okay, because basically I want to focus on pretty much, you know, I want to you know, let people know what Omni is about, and of course, you know, recap of Raya and okay. So we'll have this. Okay, let me get this up here, and okay. So let me just do a quick introduction. All right, here we go. Okay, thank you everybody for your patience. We're a little bit late as usual. Okay, welcome to Wall Street Reporter's next Super Stock live stream for October 28th, 2021. We are back with Raya Group, RYAH, on the CSE. Greg Wagner, the CEO. Greg, welcome back.
Thanks, Jack, Mr. Marks. I'm glad to be here again. It's been a few weeks. I'm glad to be here with some exciting news.
Fantastic. And again, for anybody that's brand new, you know, who's going to be watching this video, you know, I don't know, 3 months from now, whatever, the purpose of our live stream is to bring you those stocks which have that 10x to 100x upside potential. You know, companies going after massive multi-billion-dollar market opportunities that are at a key inflection point and with multiple catalysts in place to ignite that increase in shareholder value. We've had already 9 stocks in the last 18 plus months that are up between 1,000 and 5,000%. You see some of them scrolling down below, and we're going to find out if Raya is going to be that next, you know, 10 bagger plus, maybe. You know, we haven't had a 100 bagger yet, so you know, there is still that possibility, Greg.
That's the plan.
So with that said, you know, I want to talk about the. I think the idea is we're going to talk about the acquisition you just announced.
Yep.
Of Omni, and then we'll kind of, you know, actually, I think what we should do is maybe we should just do a quick refresher for anybody that may be new. Tell you know what's Raya all about, and then we'll talk about Omni.
Yeah, thanks, Jack. I think that's important. There might be some new members here. Let me spend a few minutes talking about who we are. And this has been a journey over the last 5 years. And we've finally found our niche. I like to call ourselves, Jack, a device and data story. We are a suite of IoT devices. We're a digital care platform designed to capture complex data points so that doctors and clinics and even regulators can determine the ideal customized and personalized dosing regimens for plant-based medicine. So we're not a device company. We're not a data analytics company. We're both. We actually capture captive patient dosing data with our suite of IoT devices. Our goal is to be completely agnostic to the delivery type, whether it's transdermal, whether it's inhalation, whether it's tincture, and eventually become completely agnostic to what type of medicine that gets put in our devices. We're a non-medicine touching entity. We partner with medicine handling partners who put their medicine in our cartridges or packages and distribute to their client network. So really quick, Jack, there's a couple of competitive moats so the audience understands how different Raya is from a device company or a cannabis company or a med tech company. We have 4 clear competitive moats that differentiate ourselves from most of our peers. Number 1, like I said, this is a device and data story. We are collecting captive patient dosing data with our devices in a real-time manner, all on a HIPAA-compliant cloud, by the way. Secondly, we own all of our IP. We are not licensing any of our IP from anybody else. We own all the schematics, hardware, and all of the software is developed in-house. Very important for our audience to know that because a lot of our peers don't do that. Number 3, and probably one of the most important competitive moats, is that this company is not a cannabis company. This is a med tech story. We are not married to cannabis, although it's an important part of our ecosystem. We are agnostic to the type of medicine that goes in our devices. And when we talk a little bit later, Jack, about what that means in terms of the exploding nutraceutical market and the aggressive increase in psilocybin and psychedelic research happening, we are keenly positioned for all 3 verticals with our current ecosystem. And finally, the 4th competitive moat is that this is a medical device story. That is a very lonely road. Being a medical device company or medically inspired company or a certified medical device company allows this company to have eventually statutory insurance reimbursement in select countries for our devices, which means that patients and our doctors become less price sensitive to our devices as a medical device certification allows for insurance. We only know of 2 competitors or peers in the whole world that have global aspirations to be a medical device company as we do. But most importantly, within that medical device mandate and that medical device aspiration, Jack, we will be the only company in the world in plant-based medicine technology that will have both hardware and software certified as a medical device. Think about that. Our software, our mobile applications, our back-end solution, and our hardware are considered medical devices once we complete our certifications. So, and a couple of quick wins before we get into the Omni deal. We have been selected to partake in one of the world's largest clinical trials ever to be conducted in cannabis out of the United Kingdom. It's such a large trial, Jack, that we created a customized mobile application on the App Store and Google Play just for this trial, with hundreds of APIs going back and forth directly to the clinic's EHR system to provide them with real-time feedback for this gigantic clinical trial. That is what we're looking to do at scale at a global level. Number 2, we have received what we believe is the world's first patent ever granted in artificial intelligence and plant-based medicine analytics. And that is the catalyst for us to eventually become an enterprise data solution. My aspirations, Jack, is to eventually give all of our devices away and collect that data, interpret that data at scale, and monetize that data. Until then, our devices will pay for our aspirations as we move forward. And finally, we own one of the largest privately owned databases in plant-based medicine with over 360,000 patients or users, providing millions of points of structured and unstructured data every day into one of our applications. And as we marry that application with our captive patient dosing data, the enterprise data solution will come to fruition. And we would expect by 2025, about 50% of our revenues to come from data analytics and not just devices. So that's, I think, a good recap, Jack, on where we are, who we are, and where we're going. Before I get into the Omni deal, is there any questions or comments that you have?
No. I just well, actually, no. I do have a we talked about it before, but we'll kind of recap, which is like what's the size? I think the first question is people want to know is what's the size of the market opportunities that you're going after here?
You're looking at multiple 100 billion plus markets, right? So we're looking at the nutraceutical market. You're looking at IoT device market. You're looking at obviously the plant-based medicine cannabis market, and you're looking at psilocybin market. All of these cross-reference into a one theme is that we actually penetrate all of these. So, we don't like to keep ourselves bound by certain markets, but these are 100 billion plus markets. And we're one of the only few that actually can penetrate all of these in some instance with meaning. Okay.
And by the way, and of course, anybody watching this video, we had a demo that your colleague did a couple of weeks ago. That's on our YouTube channel. People can actually see these devices in action.
Absolutely. And I recommend people to look at this because you'll be able to understand the marriage between hardware and firmware and software, the complexity, and from a patient's point of view on how they use these devices. These devices are completely controlled by mobile applications that we build in-house. They turn on the device, they turn off the device, and in certain instances, when a patient reaches a dosing limit, the app shuts off the device so they can't overdose. And with our QR code technology, it actually downloads the entire lab results of the medicine the patient is intaking, so it mitigates illicit product from going in our devices. No QR code, the app doesn't turn on a device. So we're providing safety, data, and helping close that data gap. We actually don't want to help close the data gap, actually. We want to lead the market in closing the data gap in plant-based medicine by helping doctors understand how different strains or formulations affect different demographics at different temperatures. Let's talk about cannabis for a quick second.
So when we're talking about plant-based, so we're talking about cannabis, but also that includes psychedelics, right? We're talking about mushrooms, psilocybin, all that stuff.
Correct. Anything that has a boiling point that's achievable that will release the appropriate molecules needed to medicate a patient, or any sort of formulation that has the right viscosity or density or molecule size that can go through the skin transdermally or topically, we're there. We can do it. So again, we're completely agnostic to the medicine type. We work with our partners to develop their formulations so they work in our devices so they can collect the data. So if you look at cannabis, for example, Jack, a doctor can look at things like what was the difference between the harvest date of a strain and the dosing date? Did it affect the demographic differently? We're talking about massive amount of data that they can unpack so that they can create those customized, personalized dosing regimens that everyone's trying to chase. And that's the goal for us. We're here to provide data.
So, I mean, I think the takeaway is that, you're not, because I think sometimes investors might be confusing and they think you're a cannabis company. You're not a cannabis company. You're in the drug development business. You're a tool for drug development companies who want to develop, drugs based on plant-based medicine, whether it's cannabis, psychedelics, whatever. And then you could also expand into other areas which are not even, traditional, nutraceuticals, etc.
Exactly. I mean, we're building our own nutraceutical line. Like I said before, for controlled substances, for Schedule I drugs, we don't touch medicine. We make no allusions to that. We're not formulation experts. We're very good at creating devices and the software around that. But for nutraceuticals, we decided to take our own destiny in our own hands and developed a line of nutraceutical patches that coincide with our smart patch ecosystem. And essentially, Jack, the smart patch is basically a patch with a brain on top of it that has a Bluetooth antenna and a heating element, which essentially could allow you to turn on and off your dosing on your shoulder with your iPhone. That's never been done.
For what kind of medicines, what kind of stuff?
From the nutraceutical perspective, we have 3 lines we're formulating. We're looking at a caffeine energy patch line to hopefully supply with a interested pharmaceutical chain in the South. The caffeine energy patch is designed to help, for example, truck drivers who go on long routes, they drink tons of coffee, and they go through these pharmaceutical chain routes, and they stop a lot to take coffee breaks because they have to go to the bathroom because they digested the coffee. And that costs hundreds, if not thousands of dollars every time they take a stop. Now, what if we told you that we can create a transdermal or topical solution that can boost with heating, and it can actually increase the intake of caffeine without going through the digestive system? I got to tell you, we didn't come up with that idea. Someone came to us, a potential partner. So that's one of the products. The other one's an immunity patch, which involves elements of vitamin D, vitamin C, for those who
also Greg, Uber drivers. There you go. Not just truck drivers. There's a whole massive car sharing economy that could use this.
Gamers, Jack, gamers. You know, there's a lot of gamers that taking crazy.
Yeah, they can't. You know, it's right. We have companies in the esports business, and you know these guys, they can't. They're playing. I don't know what is it, Call of Duty or whatever it is. CS. I don't even.
They don't want to run away.
Yeah, I mean it's a tournament. There, $1 million is at stake. You know,
there is so much opportunity on the nutraceutical line. Nutraceutical lines are exploding. We're also looking at potential partnerships on berberine, which is an interesting nutraceutical with one of the leading scientists up north in Canada. We're looking at obviously a CBD balance line. So the wonderful thing about the Smart Patch ecosystem is that you can actually program it to work. You set it and forget it. So let's say, for example, Jack.
Oh, Greg, I think we should mention one more thing.
Yeah.
One of the big problems with traditional nutraceuticals, whether it's like, generally the capsules, pills, whatever it is, the problem with that is vitamins, those things, they really never go into your body because they don't go into the because they basically they don't go into the digest. What you know what I'm talking about, right? They don't. Yeah. It never gets into the bloodstream. Whereas yours goes in.
What you're describing is bioavailability. So there are different ranges of bioavailability. On the lower end is ingestion, where it has to go through the stomach and the kidneys and potentially the liver and what happens there. A lot of that gets passed and doesn't get absorbed. And then on the other end of the spectrum, you have inhalation, vapor inhalation, which is highly bioavailable, but sometimes it's invasive. You don't want kids inhaling vapor quite often for medicinal purpose. In the middle or upper echelon is transdermal. Transdermal is that sweet spot where it's not invasive like inhalation, where some of the geriatrics or pediatrics don't want to do that, but it's better than ingestion because it doesn't go through the digestive system, which can cause problems. So it is a sweet spot that we've been focusing on for 2 years, and now we're at a place now we can launch this thing. And on the bottom left-hand side of the screen, you've got the Smart Pen, which will be coming out in about 2 quarters. That actually is a sublingual, which sublingual is a combination, Jack, of both, in the bloodstream, underneath, and through digestion. So it's somewhere between, sort of full digestion like a pill and the transdermal patch. But again, our goal is to be agnostic to how it gets into the body.
Okay, but the key thing is you're able, with your technology, you're able to control and monitor the delivery of all these, whether they're nutraceuticals, drugs, etc.
Correct.
Okay.
And further to that, Raya MD will allow doctors to prescribe on a dashboard which device and which medicine they want their patients to intake. And when the patient opens their RYAH app, they'll see the recommendation or prescription. And if they accept that, ultimately the app will lock the device according to the doctor's recommendation. You're talking about total remote dosing solutions here. That is groundbreaking stuff. And our guys in the back end are working extremely hard to push out these innovations and really help close the gap between what doctors are trying to do is, for example, administer medicine in milligrams and what patients are going to be doing, which is inhalation in milliliters, and closing all those conversions out and making those barriers to entry into this space eliminated. And that's what we're doing. We're closing not only the data gap, but the doctor-patient gap here.
So should we talk about the Omni acquisition?
Absolutely. Again, this is a proposed acquisition. A letter of intent was submitted to Omni Medical Services, and we're really excited about this. Don't believe this has ever been done before. The last time we talked, Jack, I talked to you about the fact that 80% of our revenues will be coming from Europe, because Europe as a continent as a whole is medically focused as a culture in plant-based medicine, and they are federally homogenous in terms of regulation. They don't have state-by-state bifurcation, and we have a very good business development team with ex-Pfizer executives, ex-J&J executives, contacting doctors and clinics to penetrate this market in the US as we see the regulatory environment starting to shift toward wider adoption toward plant-based medicine. This acquisition completely accelerates the US strategy. And make no mistake, the US strategy is by far the largest plant-based medical market in the world, by far. I think it's a $24 billion market projected by 2025. And what we have done with Omni, our partners, this is more of a partnership than an acquisition from my point of view, because they provide just as much quality to this symbiotic relationship as Raya does. This will actually accelerate us on a national scale to conduct research trials through Omni using our devices nationally. And that is groundbreaking stuff. So who is Omni? Omni is a multi-state medical online telehealth and cannabis clinic solution. They are a research and certifications company focused on treating patients with cannabis or plant-based medicine. They are a non-cannabis touching entity. Essentially, they will onboard a patient, conduct DNA testing to see what their compatibility is to cannabis, recommend the cannabis, give them a medical cannabis card, and send them on their way to a dispensary to obtain the appropriate, obviously, medication, and then come back to their doctor for review. This is made up of a suite of board certified physicians. Jack, this is a real company. They provide not only complete telehealth solutions across the United States, but they do have physical presence in 5 states and soon to be 7, Michigan, Florida, Pennsylvania, Ohio, Illinois. They're focusing on North Carolina and South Carolina and more to expand. Jack, this is a revenue generating company. They've been consistently generating revenue. Right now, their run rate is about $460,000 a year. They have really no bricks and mortars, a small rental space that they conduct. Most of the certified physicians are 1099s, and it's an add-on service that these physicians pass on to their patients. Their goal, Jack, is to move to a $1 million mark annually by this time next year with our run rate and with our combined presence with Raya. It is a 20,000 active patient network, and they've already served 30,000 patients to date. As I mentioned, it's run by 2 principals and 12 board certified physicians, and they do intend to grow. Omni is a HIPAA compliant platform that conducts a full range of patient onboarding, from DNA testing, doctor training, research, clinical trials, clinical studies, and obviously advancement in plant-based medicine technologies. So Jack, this is a real company, revenue generating company, been around for over 10 years. They know what we're doing. We love the management team there, also the board of directors there. And we see this as a catalyst to bring Raya devices into 20,000 active patients.
Okay. So that's basically the idea. Is this is how you're going to get the devices into this market with this.
That's part of the plan.
It's going to turbocharge the whole business, basically.
That's the plan. So it unites Raya's device and data analytics solution with a 20,000 patient network, and that's symbiotic. Omni is going to be helping Raya develop its portfolio of products to be suitable to all sorts of different types of patient demographics. Now, let's face it, not every single Omni patient is going to get a device in their hand, but the goal is, when we develop these clinical trials together, those clinical trials will be involving the Omni patients or new patients that both of us can recruit, and using device and data analytics to control the dosing, to monitor the dosing, and provide the feedback so they can conduct the titration.
How big do you see this as being, like, immediately accretive to revenues? Like how much do you think you can generate, like, in the first, I don't know, let's call it first 6 months? Maybe is there any integration, like you need to catch up, or can you hit the ground running and start, generating, basically 1 + 1 = 5 type of deal here?
Good question. So we do think 1 + 1 = 3, 4, or 5 in this case, because we are going to accelerate what we call a research grant strategy. We are going to be seeking funding, federal funding, state funding at scale through applications that involve Omni running the trials, using dose control, dose measuring devices like the RYAH solution. When you put devices with the obviously the research story and show that you can control and monitor the dosing, the grant applications become much more compelling. So Jack, excuse my friends, there's a shit ton of money out there in grants. There's one state in the Midwest, I'm not going to bring it up because I don't want people to go chasing it, that's offering $20 million to go and find and do research in plant-based medicine. $20 million, one grant. And that's upfront money. So, if we get a portion of that, and the Omni guys are experts at applying and navigating through the grant application process, creating the protocols, having the right licenses, bringing in RYAH to validate the protocol and the grants. That is how we start to really scale up, by obtaining federal and state grants and having a competitive advantage, a real advantage, and giving the grant providers the reason to select Omni and RYAH together. We are accelerating grant funding at scale in the United States. The United States is the largest provider of grants in the world for plant-based medicine. In the last 18 years, Jack, they provided $1.4 billion in grants for research purposes for plant-based medicine. $1 billion alone came from the NIH. So this is I wouldn't say a business, but this is actually a strategy that we will develop, we will perfect, and we will scale it. So when we do say 1 + 1 = 3, yes, because it's not just the revenues Omni's bringing in from the patient network with onboarding patients and consulting patients. The grant strategy is a national strategy that will give us a competitive advantage to really grab some money and make some very exciting, very big clinical studies in the United States. Now, the other competitive advantage we have is that we are looking with Omni's partnership, again, it's a partnership, we are looking together to create a national strategy where we can obtain through partnerships DEA licensed plant-based medicine. Now, there are only a few licensed DEA licensed growers in the United States, very few, I'm counted on one hand, Jack. But the goal is that we can obtain through partnerships that consistent plant that can go across state lines. That is the only flower that can freely move across state lines. It's DEA certified plant. With our national ecosystem and Omni's national patient network and doctor network, you've got the components to create a federal or national interoperable clinical trial framework that can go, a clinical trial can go from 5,000 to 100,000 to 300,000 if we do it right? So once you nationalize things, once you can actually freely move cannabis around and you have an interoperable framework where Omni can pull in clinics from all over the United States using our ecosystem, that's game changing. That has never been done before. And that's the long game. In addition, one of the other reasons why we combine forces is because once a company receives a certain amount of assets, 50 million, and they're also considered a publicly listed company, that allows us to have certain exemptions in terms of reporting, and actually will probably help us fast track our grants and applications. So HB 21 exemption, which I have no business talking about, that should be Dr. Ryan Lakin, the medical director at Omni, will allow us to fast track basically our ability to obtain grants by having that 50 million asset number and being a public company, which we already are. So we're moving toward this H2B1 exemption plan as well, which will further separate us from the pack. So that's the RYAH Omni plan in a nutshell. Now let's talk a little bit about how we're going to do this transaction, how we're contemplating this transaction. And before anyone panics, relax. This isn't going to be an overly dilutive process. It's not going to be an overly drain on anyone's cash reserves. That's not the goal. The goal is to combine forces to get HB 201 exemption. The goal is to combine forces to get the DEA federal strategy going, and combine forces to accelerate the grant strategy that I just talked about. This is not designed to hurt RYAH. It is not designed for Omni to cash out. They have no intentions of going anywhere. This is designed to create scale and leverage in a manner that's not going to hurt either company. We're going to conduct this transaction in a way that is materially non-dilutive to our shareholders, and in a way that's materially not a cash drain. And if that means we have to stretch out, the payment cycles or whatever we agree on, we're very comfortable with our partners at Omni that we'll come up with something very amenable to maximize shareholder value. So it accelerates instantly a U.S. strategy with a transaction that will be non-harmful, non-dilutive, and designed to maximize shareholder value. Omni will run. They will continue to run independently. We don't know how to run clinics, they do. And we will continue to run our product and offerings independently. It's when we bring the clinical trials and the patients together with the devices, that's how we're going to coordinate. But again, this is how we're going to do this. Obviously, we've been getting a lot of calls from investors who are extremely excited about this story. We're getting calls from partners who believe that this is the most sensible thing they've seen from RYAH in quite a while. Our business development team is very excited about this. It gives them a leg up to start to platform off of this and start to expand more discussions with other clinics. Obviously, Omni's board is completely on board, and my job is to make sure that the logic I've just passed on to this community, to our investors, gets appropriately passed on to our board of directors, and we actually conduct a formal evaluation and we get this done.
Okay, Greg, we got a couple questions. Oh, sure. We have one more. We want to do one more slide, or
that's it? No, that's already discussed. Yeah.
Okay. So let's go. We got a bunch of questions here.
Sure.
Okay, so in terms of the devices, James is asking, who pays for the devices?
Between Omni and RYAH?
In general, yeah. When you do these trials and all that, or
it's a good
is there any insurance reimbursement or any, what happens?
Good question. So the goal is for the grants to materially fund the purchase and use of the devices through different mechanisms, through active CTP codes. So either through Omni's acquisition of the grants or a partnership between the both, the goal is to get the devices into patients' hands by using those grants to fund parts of these trials, which include the product.
Okay, here's a really interesting question. Mark is asking, have you been approached by any pharma companies about developing potential preventative solutions for epilepsy with cannabinoid-based consistent doses with your platform?
So we know that ADHD and epilepsy is a common and popular indication for kids for pediatrics through using THC or CBD strains, and we have partnerships around the world that we're working on to develop formulations. Well, they're going to be developed formulations on the patch itself. THC patches would be better for pediatrics, ADHD, and epilepsy. The interesting thing about the patch is that if you have a THC formulation and the kid is having an episode, remember the boosting capability of the patch will actually, by heating and warming up that patch through a controlled program on the app, will increase open the pores of the skin and activate molecules, and will increase bioavailability. So for epilepsy, that's what we think the perfect IoT device is, to have the ability to do a constant release, and then when it's needed to boost that. But we're not talking to big pharma or pharmaceutical companies at the moment on this specifically. We're talking to our distribution partners in Europe and the United Kingdom to find ways to advance this through clinical trials.
Okay, Simon's asking, will Raya devices be sold to Omni's patient network? So I think you kind of.
Correct. Yes, and again, there, as we move toward a global medical device mandate, and again, like I said, we should be the only company in the world to have both software and hardware to be certified as a medical device. We will start to look at MDSAP, medical device standard order procedure, for FDA. That would mean FDA cleared, not FDA approved. But then you could look at things like Blue Cross Blue Shield potentially kicking in for reimbursement there. It really depends on the country. So in Germany, statutory reimbursement for devices that are medically certified is common. Other parts of Europe is quite common. Up in Canada is probably partial reimbursement, and the United States as well. So we're working with our friends at Omni to refine the strategy in terms of reimbursement. But the goal is to really grab that grant money and make this work.
Okay, somebody wants to, I guess, do a demo. Is there a Raya app on the Apple Store that's up and running? Can they do? How can they give this a spin?
Yes, there is. I think you could look up Raya Health or Raya Health Tracker on the Apple App Store and Google Play. You will need a device. Unfortunately, these are clinical solutions, clinical devices, and we don't sell them to individuals or on e-commerce. This is delivered to clinics and distribution partners who have patients. So you could take a look and take a spin, but you would only get so far without the device, because it requires you to have a Bluetooth connectivity with the device and scan a QR code. But you can still look at and you could look at the demos on the WSR, because the demos go through the entire portfolio, including all of our mobile applications. Each device has its own mobile application. So we encourage you to look online on WSR, look at our website, RYAGroup.com. Plenty of collateral to look at to get the full feel of the application.
Okay, Nell's asking, okay, what's going on with the OTC trading of the shares?
It's a work in progress. As you know, we're a Canadian listed company. We are working toward DTC eligibility right now. And then ultimately, once we obtain that, we'll be moving toward an OTC/QB strategy. We also have a lot of interest in uplisting or cross-listing onto the LSE in London eventually, sometime next year. As I mentioned before, a whole bunch of our revenues will be coming out of the European continent, which includes the United Kingdom, and we want to align our capital markets footprint with our product offering. But OTC/QB is on the agenda. We are getting a lot of calls on that. We understand people want to buy the stock, and it's sometimes tricky to do so on the CSE. We're focused on it, and it's on my mind every day.
When is Raya going to be profitable? And I guess what is the revenue expectation? I don't know if revenue's 2 years out. What numbers do you want to give out?
I think 2 years out, Jack, 24 months. We're looking at between 4.5 and 7 million, especially with the Omni acquisition. That's a much easier number to now obtain, with the US becoming a more captive audience now that we have this footprint. And then we're looking at probably 16 million the year after that. Our UK clinical trial is kicking off. They've purchased devices from us. They've purchased an initial order of cartridges, 10,000 cartridges. We are starting to see the market open up after 15 months of COVID problems, which really limited the company's ability and the clinic's ability to have space in universities to conduct the appropriate testing needed to conduct these trials. That's all behind us now. So we're seeing in 24 months easily, in the end of 12 months, a profitable run rate. Now, our burn rate is very small. We're still in the 70,000 monthly burn rate range. We're keeping things light. Omni keeps things light. Their EBITDA is about 40%. And we intend to stay nimble until the revenues allow us to expand appropriately.
Okay, and of course, I mean the business you're in, I mean, the multiple, the valuations of these companies could be, I don't know, 20x revenues, 30. I mean, the numbers could be really phenomenal.
Absolutely. I mean, for the most part, Jack, our margins are 50% with 100% markup for the most part. So, and then as we start to be able to monetize data, it's a heck of a lot easier to make money on software than moving devices all around the world. Now we have this balanced approach where we're making money on creating customized applications that is supplementing, which is a surprise, that is supplementing our device and delivery capabilities. So we are a software company and a hardware company, and we're bringing in revenues on both. Actually, right now, our software revenues are exceeding our hardware revenues.
Okay. A couple more questions before we wrap up. James is asking, any device supply issues, with the chip shortages and all that, I guess.
Very good question.
Where are the devices manufactured?
The devices, the Raya inhaler is manufactured in China, in Shenzhen, China. Again, we own all of the IP. We have all the schematics, so we can always pick that up and move wherever we want. And the patches are being looked at in 2 different locations. We obviously are mindful of mitigating concentration risk. We have seen mild friction in our MCUs, our processors for the smart inhaler, but these are tiny little circuit. These are not the ones that you would find in an automobile. We went from something like $2. This is a $2 part that went from $2 to $4 or $5. This isn't a part that is going to break the bank. Our guys in China are very good. They keep an eye on that market. We think we've turned the table there, but again, it's not a material part, nor is it a part that's going to disappear on us.
Okay. How many patients are in the UK trials that you have?
The UK trial just kicked off with the initial order. They're going through what they call the pre-trial phase right now, but we do anticipate, their target is between 50 and 100,000, but it's more than that. In year 3 of this 5-year trial, the initial results of this pain study will be submitted to the NHS, the National Health System there. And if the NHS determines that this trial was effective in treating chronic pain, Raya would be potentially exposed to an additional 7 million chronic pain patients in the United Kingdom. 7 million. Because we're inside the study, they would have to be selecting Raya as part of a wider framework as part of this expansion if they decide to do that. So it's much more than the study, and we're looking to do that and replicate that model with our partners in the UK and Europe, all around the world.
Okay, let's wrap up on this question. Okay, so the wealthy lion. What can we expect in the next 2 months? This is the question we always like to ask at the end. So major milestones, revenues, any hurdles?
Number 1, we expect to get ISO 1345 medical device certification for our and MDSAP medical device standard audit device certification for the inhaler. Again, making us the only hardware and software certification in the world. We expect to be launching officially Raya Wellness. We've already obtained a legal entity. We're developing an e-commerce site, and we're developing 3 patch lines in the next 2 to 3 months. Where we control our own destiny. We'll have our patches and we'll have our brains. Of course, Raya
and that can go to market right away. The nutraceutical stuff, you can be in the market right away.
It's not a controlled substance. It can go right away. We're not making any claims on this stuff. So right now we're making sure that this is not a gimmick, that these patches actually penetrate the skin and they create an efficacy of some kind. So we're taking our reputation very seriously here, and we need to make sure that these patches work. You can also be expecting Raya MD coming out in the next 90 days, where doctors can virtually prescribe remotely medicines, and it will affect the patient's application and device accordingly. So lots to do. Health Canada Class 2 medical device certification is also on the horizon. It's completely dependent on the ISO certificate. Also, TGA Australia medical device certification just around the corner at the beginning of the next year. So lots going on in the medical device space, lots going on in innovations, and obviously the Omni merger will keep this company quite busy for the time being.
Okay, Greg, on that note, I want to thank you for the update, and we look forward to getting more details on when the Omni deal closes and any other news coming up.
Awesome, Jack. Thank you so much.
Fantastic. Thank you. And thank you, everybody, for joining our live stream today. We'll see you on the next one.
Cheers.